What's up guys, and in this video I'm going to show you how you can build your own trading bot with over 93% win rate. Now, some time ago I actually came across this article named the 10 best indicators for day trading proven by data. And this article made some pretty big claims. I had listed different trading indicators with over 93% win rates, and I wanted to see if this was true and how we could implement this trading strategy ourselves. In fact, this article starts out by claiming that they have tested over 10,400 years of data. Now, this is a very impressive amount of data to be testing, and I want to see just how accurate it was. Moreover, later on in this article also explains the different types of trading indicators and the win rates related to each one of them. What I found most intriguing was using the price rate of change with a Heiken Ashi candlestick chart. Now, for those who are unfamiliar, the price rate of change indicator, also abbreviated as the ROC, is generally used to measure the change in an asset's price over time. And you can find this value by taking the price of an asset at time B minus the price of the same asset at time A, and then dividing that entire result by time A, and multiplying it by 100 to get a percentage. Now, this price rate of change is also an oscillator, which means it will be oscillating around zero. A positive ROC typically means a bullish trend, while a negative ROC usually means a bearish trend. Moreover, the ROC will also oscillate around zero when the market is consolidating. Now, if their data is true, then the ROC might be one of the most undervalued trading indicator today. Moreover, the rate of change is also incredibly important in the stock market because it analyzes specifically the momentum and the trend of the current asset. Furthermore, this trading indicator is also very good at identifying market bubbles. For instance, if a very large ETF or index fund has a very large spike in its ROC, then it might mean that the market is currently unsustainable. The ROC empowers traders by measuring both the speed and direction of the price movement. However, if you read later on in this article, you'll actually notice that if you just use it on the normal candlestick chart, it only beats the market 43% of the time. And that's where the Heiken Ashi candlestick chart comes in. But what is Heiken Ashi? Well, Heiken Ashi is a charting technique that smooths the price movements, providing a clear picture of the trends. And unlike traditional candlestick charts, Heiken Ashi charts factors in the open, close, high, and low prices, making them particularly useful in reducing market noise. Put simply, Heiken Ashi is an average of the highs and lows of a specific candle, rather than just showing the extreme high and the extreme lows of that specific candle. In this way, the Heiken Ashi chart actually smooths out the market overall, making it easier to recognize trends and momentum. Now, combining the ROC, or the price rate of change, with the Heiken Ashi chart actually gives you the 93% win rate that is stated in this article. However, I would like to mention that this strategy doesn't actually do very well in consolidating markets for two major reasons. One is that because the price rate of change is momentum based, that means that it is a lot harder for it to determine any momentum within a consolidating market. Even if you notice this indicator oscillating around zero, it is still very hard to identify breakout points or trends that may occur. And the second reason is that the Heiken Ashi chart also loses some of its validity within a consolidating market. The Heiken Ashi chart is meant to smooth out your volatility over time, making it easier to identify bullish and bearish trends, which once again doesn't really occur within a consolidating market. However, within bullish and bearish trends, these indicators are incredible and do truly live up to its 93% win rate. Moreover, the Heiken Ashi chart is also very beneficial within the crypto market just because it allows you to smooth out the short-term volatility of the crypto asset and makes it easier for you to identify trends and momentum within that asset's price movements. Now, according to the article, with over 20 years of backtesting, they have found that the ROC combined with the Heiken Ashi provides a risk and reward ratio of 2.5 and outperforms 66% of the stock market, which is absolutely incredible. In fact, I actually did some backtesting on my own and found very similar results with this Heiken Ashi and ROC indicator combination. Moreover, in the example provided by the website, it actually shows how this ROC and Heiken Ashi combination performs on Apple. Now, the backtesting results on Apple over the last 12 years actually shows a staggering 1,795% return, which outperforms the buy and hold strategy of 1,127%. Moreover, utilizing the ROC with Heiken Ashi settings of 9 on a 5-minute chart for day trading has also resulted in an impressive 93% win rate over 40 days. Now, while these numbers might seem incredible, still keep in mind that Apple increased by itself over 1,000% in the last 12 years. And as I said before, the Heiken Ashi and ROC combination works incredibly well in bullish or bearish markets, which may have skewed his numbers a little bit. However, you can still see that the Heiken Ashi beat the market by over 600%, which is incredible. Now, if you're curious how you can backtest these strategies on your own, I'll also show you how you can do that with a trading bot as well. But to trade successfully, you have to make sure that you configure the trading bot with specific settings that you can backtest, which reveals its overall potential. And now that we've discussed how incredible these indicators are, now let's discuss how you can implement the strategy within your own trading bot. Now, these indicators in this trading bot will just build on the trading bot that I actually explained on in my last coding video. So if you haven't seen that, you should go check that out in the description below. And if you're enjoying the content, make sure to hit that subscribe button and let's jump right into the coding. Alright, so like I mentioned earlier, this code, a lot of it is what we already went over last time when I first introduced the algorithmic trading bot. But for now, let's just go over exactly what all this code is and how we can expand on that to implement the ROC and how you can actually trade it. Now, the first thing, once again, that you need is your API and API secret from the Binance clients. And then first you need to declare this client, which just allows you to connect to the Binance client and make sure that if you're in the US, make sure you have the TLD US. Now this first section here is where we have our price updater class. So this allows us to connect to the Binance client and gets the prices for whichever asset that we want to trade. And this last line down here, which is the time.sleep, just says how much time we want in between every time that we check the Binance client. And once again, we're not using WebSockets in this code just because the Python Anywhere, which is what I recommend you run the trading bots on, doesn't actually allow you to use WebSockets. So we'll just use this for now. Now this next section here is actually where we have all of our different indicators that we can code out right here, which is called class algorithms. And as you can see here, what we went over last time was how you can implement MACD and the RSI trading strategy in this algorithmic trading bot. So if you're more interested in that as well, make sure to check out the video in my description below. And after that, we have the check class, which just allow us to get the indicators from the algorithms class and check whether it actually gives us a buy signal or a sell signal, as you can see here and here. And finally, this last section is our actual algorithmic bot and how we can actually implement it. So first, once again, we connect to the Binance client. We have the interval, which is the 1 minute interval, and then the K lines, which is all the different candlesticks that we need to get, and then the closing prices. And then we also need to check which indicators that we want to be checking. So if we have a MACD and RSI trading strategy, then we need to check those. And finally, then we can actually print out buy signals or sell signals down here. And finally, this is our price check function, which just allows us to connect to our price updater class. Finally, this code down here just shows you how you can implement your own MACD and RSI trading strategy, which I actually have implemented here. But obviously for this video, we do need to learn how to implement the ROC and the Heiken Ashi candlestick chart to this trading bot. So I'll just go over that now. So once again, we can keep a lot of the same parameters here because in the future, you can actually use all these in combination, which I'll explain later. But for now, we'll just make a new algorithmic trading bot. We can keep the same symbol, which is Bitcoin and USDT pair, and how much money we're going to be using to trade, which is $100. Now after this, we do need a symbol for Heiken Ashi. Like that, and we can either insert yes or no here, and to keep it simple, we can just say Y or N. So obviously for this trading indicator, we do want to use the Heiken Ashi candlestick chart, so you can click yes. Then after that, we can just write out the parameters for the ROC, like this. And the only parameter that we really need to give the ROC is what interval you're going to be using. So for instance, in the article, it actually used 9, so we might as well just use 9 as well within our trading bot here, just like that. And now after we have this is literally all we need to give to our algorithmic trading bot. And once again, we don't actually have to change anything up here. We just need to add in the ROC to this class algorithms here. So this is literally all the code that you need to calculate the price rate of change all on your own. And once again, I'll show you how this works later when we actually run the code overall. And now that we have ROC, that's half of it done pretty much. So then we need to calculate how we can change the normal candlesticks into the Heiken Ashi candlesticks. And finally, now that you have all of that, then you can finally return the H8 data, which is basically how you can calculate the Heiken Ashi candlestick chart. Now keep in mind there are a lot of values in here, such as the volume or timestamp, which you might not necessarily need with the price rate of change. However, in the future, if you want to implement other trading strategies and trading indicators with the Heiken Ashi chart, you can easily do that with all the different values that you're giving it here. Now, after you have all of that, that's pretty much all you really need for the new algorithms. Then we can move on to our check class. Now we can just simply create a new function that will check whether the price rate of change is giving us a buy signal or a sell signal or not a signal. So we can just see price check like that. Once again, we can just give it the self parameter and ROC. And then all we need to say if ROC, the second to last one, is less than 0 and ROC last one is greater than 0, then we can return a buy signal. Now basically what this checks is that if the ROC is crossing from below the 0 to above the 0, which means that the ROC is changing from a negative percentage to a positive percentage, then we can classify that as a bullish signal and then we can place a buy signal. Otherwise, if we see that the ROC is going from a positive signal, or if -2 is above 0 to a negative signal, which means that the -1 will then become below 0, then we can actually return a sell signal like that, which is the exact opposite. So now after you have all this, then one final thing we need to make sure is that if neither of these cases are true, then we can just return none, which means that there is no signal or the market is already in a bullish or bearish trend. Now, as I mentioned earlier, you might want to check or create different levels for the ROC to cross, because if the ROC is oscillating around 0, that might mean the market is just consolidating. So it's a lot harder to identify signals there. So if you want to change that, you can just create more of these if or elif statements and change how high you want the value to be before you place a buy or sell signal. But I won't be covering that in this video, but that's just something you can do if you wanted to expand on this strategy more yourself. Now we do need to go back to this AlgoBot class and just change some of the different parameters here. We also do need to change the init function a little bit just because we're adding the Heiken Ashi as a variable that we could be using. So there you have it. That's all you need to input, just like that. And once again, this will just take the ROC and then it will give you either a buy or sell signal or none signal. And then it will take all your different signals that you might have from all your different trading indicators and then determine if all of them are buy or all of them are sell. And if either of those is true, then it'll place a buy order and a sell order. And once again, this code will also all be in the description below. So if you want to just get it from my GitHub and copy and paste it, you can do that as well. So after this code is all good to go, then we just click run. That, and then if you just give it a second, then it should print out the ROC values that it's getting from the Binance client. And there you go. As you can see here, it oscillates between being negative as well as being positive, which means that this is working. So if you see a lot more negative signs here, then that means that the Bitcoin or USDT pair is actually in a bearish trend right now. And if you want to look at this bottom number right here, which says that ROC is equal to none, which also makes sense because the ROC is not currently giving any values because the last two values are both negative, which means that it hasn't crossed the 0 line just yet. And if you want to look closer, you can notice that the ROC is actually decreasing, which means that this could just be more of a bearish trend. And now if we give it a whole minute, then it should print once again, and we can just check that one more time. As you can see here, we do have AlgoBot 1, and we do have starts, and then we do have ROC and the values related with that. And there you go. It just printed one more time. So once again, we get all the values from ROC, and then it just prints out none like that. And after this, it should just be stopping. And basically, this is all you have to do. If we want to check everything as well, then we can also add in the MACD and the RSI parameters just to show you how it all works in tandem together. So once again, we can just say MACD, and then we do need to give it the different parameters, which once again will just be a list, and we can just say 12, 26, and 9, which is usually the basic MACD values, and then we can also add in the RSI here, and then we can just say 9 for this, which is also a pretty basic RSI value. So now what this code will actually do is take the ROC and MACD and RSI and check them all three at the same time, and it'll also use the Heiken Ashi candlestick chart to check these values as well. And then if we try running this one more time, then we do see that the ROC and MACD and RSI all have different values like that, and you can see this up here. So the RSI is currently 47.7, and the ROC once again are all these values here, which is actually oscillating between negative and positive right now. And then finally up here you can see the MACD values, and you can see that they're all returning their own related signals, and if we give it a minute then it will print again. So this is how you can actually expand your own algorithmic trading bot indicators into what you want it to be. And if we give it one more minute, then it just should print one more time. And there you have it. That's how you can implement your own incredible 93% win rate strategy on your own. Now, as I said before, there are some downsides to this strategy. It doesn't work well in consolidating markets. And as always, there will always be some risk and reward to trading. So make sure you still backtest some of your numbers to get the parameters that you want to trade with. Overall, I think the strategy has a lot of potential, so if you do take the time and effort to change the parameters and settings the way you like, I think it will become very, very profitable. But at the end of the day, these are all just tools for you to use so that you can grow your own wealth. And if you're interested in more content about how you can grow your own wealth, especially with crypto trading bots, then make sure to check out the rest of my channel. Until next time, happy trading.